My friends, what is going on? It is time for the AMC Weekly Outlook video. We've got a lot to cover today, so I'll try to jump right into it. The Weekly Outlook videos are always going to be longer, so I apologize for the length. If you are new to my channel, thank you. I appreciate your time. Like I said, these videos are typically going to be a little bit longer. If you're an old dog, thank you. I appreciate you. Before we jump into the video, you guys know the deal. Nothing I'm giving you is financial advice. Everything I'm giving you is for educational purposes only, so that way you can make awesome decisions for yourself, for your family, for your portfolio. That's all I want anybody to do, is make the best decision that they possibly can. So we've got a lot to cover today. Please like and subscribe to the channel, all that good stuff. So first thing I want to do is let's talk about Ape. So obviously we've got big things happening this week when it comes to AMC. AMC effectively is going to be splitting into two tickers. You're going to have what used to be AMC right here is now going to become AMC and Ape. So there are, according to Adam Aron, there are 516,820,595 shares of AMC. So there's going to be an exact amount of Ape as well. However, if you go and you read, so Adam Aron tweeted out, and I highly recommend everybody go through and read and reread and reread again until you really feel like you can understand the information that is going on with it. But he released a whole bunch of questions when it comes to how this is all going to go down. So there are 1 billion Ape shares that they have already issued. So let me go over here. Also, too, if you haven't done so already, please follow me on Twitter, Colin_Gladman. So this comes directly from what they released. Theoretically, over the lifetime of the security, the maximum number of AMC preferred equity units, or APE, that could be authorized over time is up to 5 billion. Let me read that again. Theoretically, over the lifetime of the security, the maximum number of AMC preferred equity units that could be authorized over time is up to 5 billion. So there is 5 billion total AMC preferred equity units. Now, how many are they going to have at launch? However, the AMC board currently has only authorized, so let me say that again, they have already authorized the equivalent of 1 billion of these, okay? And 516, 820, 595 are going to be issued at launch, because that's the dividend, okay? So for every 1 AMC share that you own, you are going to get 1 Ape share to go along with it. So in theory, the entire float of AMC is that 516 million number that I keep talking about. So that is how many is going to be sent out as far as apes go. Now, the board has no plan or intention in the calendar years of 2022 or 2023 to authorize more than this initial 1 billion. So let me say that again. There is already 1 billion that has been issued. Okay? Now, that doesn't mean there's 1 billion that are ready to be bought right off the bat, but the board essentially has given them another 484 million that they can release into the market at any point in time. Now, they don't plan on more than that 484 million in 2022 or 2023, but they can release more. So everybody that's been on my case about this is a dilution and we have to vote and all this other kind of stuff, number one, they're wrong. Number two is there are already 8 shares ready to go into the market. They don't need your vote. They don't need my vote. The only thing they need our vote for is if they ever want to convert 8 shares into AMC shares. That's what they need your vote for. They do not need your vote for more Ape shares hitting the market. I just want everybody who watches my content, which I've got like 5,000 subscribers. So I want all 5,000 of you, if you watch it, to know and understand that that is what is going on here. They can, and in my opinion, they will release more ape shares. And they will do it when they feel like it makes sense. Now, what makes sense to me and what makes sense to you may not make sense to Adam Aron and the AMC board of directors. They might do it right off the bat. Who knows? I don't think that's most likely. What I do think is most likely, like I've always said, is a run-up in APE's price, which is what I'm hoping for. I'm hoping we see true buying pressure on APE because it doesn't have an option chain attached to it. So I'm hoping that we're going to see true buying pressure when it comes to APE. So that way, we can really help, raise some money for AMC and help eliminate some of its bad debt that it had to take on to survive the COVID-19 pandemic. So let's go back to the drawing. So there are 483,179,405 APE shares that can still come into the market. And when that happens, what is going to be diluted is APE. Okay? So as they release more of these APE shares, let's say they release 200 million of them. So then there's going to be the exact same amount of AMC shares, but there is going to be 716, 820,595 of the APE shares. So APE is going to be what will be diluted, not the original float of AMC. And the reason that they're doing this way is because AMC shareholders have said no to dilution. So what Adam Aron said is, he said, fine, I'll give you a dividend, I'll give you a share count, and you've also repeatedly asked for ways to help AMC pay off debt and raise money. Great, go out there and buy APE. That's how you're going to do it. So what he's basically saying is that they're giving us what we want, but he's also tired of the retail shareholder base essentially holding AMC hostage by not being able to release more shares. Now, once again, for any of those, so once again, the example here was 200 million. So for those 200 million to affect the AMC float, then they would need our vote for that. Until then, what is going to get diluted is it's going to be APE. But because APE's value comes from AMC, in a way, it's basically a backdoor dilution towards AMC's original share price. Now, like I said, this is going to be its own ticker. This is going to be its own ticker, okay? So it doesn't directly dilute AMC, but because AMC and APE came from the original share price of AMC as closing price on Friday, then it is a backdoor dilution, okay? But let's say APE is trading at $10 a share when they decide to dump these hypothetical 200 million shares out there. And once again, this is all hypothetical. This is just me spitballing. Well, then what that does is when they do release that, and APE is trading at $10 a share, honestly, I'm hoping it's much higher than that, but we'll see. But let's say they decide to dump 200 million out there, then that immediately raises $2 billion for AMC. And that could be a good thing. Could be a good thing. That would be a good thing. They could pay off some debt with that. If they had a great opportunity, Cineworld is filing for bankruptcy. So if they have a great opportunity to snatch up some theaters for pennies on the dollar, that could be a great opportunity for them. So they need capital. What I don't like about AMC, if you follow me for any amount of time, I have always said that the squeeze aspect of AMC was always a secondary towards my investment. I love movies. I love the movie experience. I love going to movies with my family. I love going to, my son and I go see a ton of movies together. And so it was a wise play coming out of COVID going, these, the airlines, the cruise lines, all those kind of things coming out of COVID. And so I chose to go with AMC because I love movies. And I'm a big believer in investing in things that you're passionate about and futures that you want to see. So that's why I jumped into AMC in the first place. So the squeeze aspect of this, the MOAS and everything along those lines, that was always a secondary benefit. Yes, the only reason I invest in anything is for my money to make money. However, my play on AMC was a technical one and a little bit of a fundamental one based off of what the chart was telling me and based off of the fact that it was beaten up by COVID. You knew this was going to see a rebound in some form or fashion. And then when that led to the January run that was obviously manipulated, that obviously Robinhood and Citadel and all those different hedge funds and brokerages colluded with each other, then it became more to that than me. Then that's when I jumped on board, kind of the buy and hold movement and everything along those lines. Now, also having said that, it's turned into a little bit of a weird cult as far as I'm concerned. And I'm just trying to be nice there. It's turned into a massively weird cult as far as I'm concerned. I want to see, fair market and everything like that. But some people are just flat out delusional when it comes to this stuff. And what you've done is you've held AMC hostage of being able to raise money. What I want AMC to do is I want them to issue more APE shares. I want the price to run up. Therefore, they can naturally drive out the short thesis by eliminating some of that $5 billion of debt that they have. Now, I'm okay with some debt, but the reality is AMC's burning cash right now. Once again, in December, they had like $1.8 billion on hand. Here we are at the end of quarter two, they were down to $1 billion. So they burnt $800 million. Let me say that again. They burned $800 million in 6 months. And then the reality is they've had some good releases come out. So what we need to do is they need to get rid of some of that debt so we can get cash flow positive again. Once the company is cash flow positive again, then we can really drive out the short thesis, and that is going to do wonders for the share price. That's what I want to see. Any type of squeeze or anything like that is going to be a bonus on top of that. So like I've tweeted out multiple times, no, I don't think APE is going to, go, oh, there's 800 billion synthetics out there. They've been lying to us the whole time. That's not what I think is going to happen, okay? I don't think it's going to do anything, okay, other than give AMC a great opportunity to raise money, and I'm hoping we get to see great buying pressure. Now, the other argument is nobody's going to buy APE, and I don't buy that either, because if you were willing to buy one share of AMC before, well, now you can buy here and you can buy here, and that total would be the same price as AMC was before. Now, eventually, hopefully, we're going to see them trading on two different tickers. I hope it doesn't look like the way AMC and GME look right now, which the way those two look right now is this, okay? They track identical, okay? The only difference is going to be a little bit of the levels, but for the most part, these two tickers trade identical, okay? So, and that's why I've always bought, and that's why I've always hedged with both. Okay? I love video games too. If you follow me on Twitter, I love playing some Warzone. All right? So, going back real quick, then we'll move on. Sorry, I've already spent more time on this than I wanted to. So, to sum up, AMC is splitting into AMC and APE. There's going to be identical floats of both. However, they already have $483 million ready to rock and roll. When they dump those onto the market, we don't know how many they're going to dump on the market. We don't know exactly when they're going to dump on the market, but I promise you it is coming because AMC needs capital because it is burning cash. This is fundamentals 101, and that's what Adam Aaron cares about. He cares about AMC being able to pay its bills, being able to, make acquisitions when it makes sense, but they can't do that right now because they're strapped with too much high interest debt that they had to take on to survive COVID. Hope all that's clear. Please go back and rewatch if it's not. So, let's jump in from a more technical standpoint. So if we look at the broad market, SPY is getting up here, which if you watched my video last week, you knew right here at the about 430 level was going to be where SPY was going to meet some resistance. SPY was also, it had this massive run. What is this? From the bottom, it was like a 20% run. Yeah, 19% run. So it came up here. It's met resistance that it had where it was trading on the resistance back here in early May. And now it is getting kicked off. What I'm hoping for is I'm hoping for support right here in this 416 area. So come down here, might even went down and fill the gap to like 412. And then hopefully start to see another curl back up. And then after that, you can see here, its next big test is going to be 450 range. And that's going to be where, it really started to tumble. And that was going to be from back here in April. And then, its next big test is going to be getting over 460. And then after that, it's going to be, pushing towards the all-time highs. So a normal retracement here is going to be what I'm looking for. I know everybody's tracking, all their '08 fractals and all that good stuff. And look at that. That is going to be a perfect, basically 236 touch. So if you draw your fib from your low to your high, come back down here, your 236 touch is going to be 415. It could also 382. Your worst case scenario, I think, would be we'd be looking somewhere in the golden pocket around 389. There's been a lot of, as I've seen on Twitter, Unusual Whales is tweeting out about how housing market is looking awful. It just seems like a lot of global bad news has been coming out this weekend. So that could definitely have an effect on the markets overall and, people looking to get out. But you got to remember, if what market makers want, what institutions want is they want bag holders. So what they like to do is pull everything down, and then as it's getting pulled down, retail goes, oh, look, everything is crashing, and then they full port a bunch of puts, and then institutions, they flip it. They take all that money by flipping it over to the long side, and then they push it back up, and then retail is trapped down here. And then once retail is trapped down here, and they go, oh, okay, screw it, I just got to get out of here. I got to get into calls now. And then they get into calls, and it gets up a little bit higher. Like, okay, nice, yeah, I'm going to get all that money back. And then institutions dump it again. And so when I talk about riding the waves, what I want anybody who follows my content to do is I want them to ride the waves. I want them to think like a market maker. So I think SPY's got some retracing to do. I entered a bunch of Apple puts a while ago, and those look to be doing great. And I think, like I said, I'll be looking to exit on things, around that 415 area. It'll be determining on, what price action news, yada, 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 is going to be looking like. So if we get over here into GameStop. So GameStop, massive, bullish pennant that it was up in, pushed out here recently, and then came down, kind of retested it, and then based on the Ryan Cohen rug and Bed Bath and Beyond, which is what he did. I don't care about your opinion on it. He took profits. Good for Ryan Cohen. I don't care. So came down here, pushed down, and then we got rejected off the top of the pennant. So if we don't start showing some pretty solid strength here from GameStop, then coming down here and testing the support at 32, and then coming down here and testing support at 29, you can see here that ever since it pushed up in May, you've got multiple points of support here for GameStop. So I would imagine right here in this $29 to $30 range is going to be pretty solid support. So even if it does, we have to, it might be a slow bleed process. It might be come down here, then come back up, then come down here, and then really tight, and then get kicked off here before it can start breaking out again. So that's definitely a possibility. Anytime you push up and you look like you're ready for a markup and that doesn't happen, then you're going to have to come down and you're going to have to refuel. That's just the way that it works. This is a perfect example. You come up, you get kicked off. You come down to refuel. You come up, you get kicked off. You come down to refuel. You come up, you got kicked off. You got to come down here and refuel. You pushed up and then you got kicked off of the big picture. And then you had to come down. You didn't have to refuel last fire. Then you pushed up. So this is just the up and down. And up and down, the ride in the waves. Ride the waves. This is what Colin wants you to learn how to do. Is ride these waves up in here, okay? So, I think there's good solid support. I don't think it's got to come, all the way back down here. But if the overall market does not do well at all, then it's definitely a potential. Okay, so let's take a look from a fib standpoint right here. So 32, look at that right there. So right around 32, 34. 32.50 in that ballpark range is going to be where I would look for it to come. You can see right here that it found support on the 0.5 on Friday, so definitely look for a continuation. Let's go in here and look at the 15 minutes. So yeah, I mean that's some good price action right here. So if you watched my AMC video, I think it was Thursday of last week, no surprise, GameStop looks the same, but you had these real weak price action candles, so just not a lot of voting of which way they want the stock to go. Then you had the after hours where Ryan Cohen dumped all of the Bed Bath & Beyond options and shares, got pushed down here. I think same thing, pretty much sideways trading, but then right towards the end of the day, you got some pretty nice, looking candles, but once again kicked off that top bear trend line. So what you would like to see, just like I said in that video, it's just kind of a continuation of this rounded out bottom starting to, push back up. That's what you want to see. Okay. Now, if we go over here into AMC, this is going to be on the weekly candle basis. I called out Friday of last week, the dark cloud cover, the spinning top at the top of an uptrend. And once again, a spinning top is a 50-50 candle. Okay. However, what is not 50-50 is when a spinning top happens at the bottom of a downtrend, then it has more weight that's a sign of reversal. Just like when a spinning top happens at the top of an uptrend, it is more than likely a signal of reversal. And reversal is what we got. Okay, so pretty much just broke straight back down into the long-term bear trend from here on a weekly basis. And so, this candle right here, to me, would signify, it pretty much is like this one right here. It definitely could signify more of a downtrend. Also, too, I keep seeing people saying, okay, so AMC is going to, split in half with APE, and so that means $9. So we're going to be down here. So we're going to open up to this $9 gap down. That's not going to be what happens. The chart is going to be adjusted. So my anticipation is APE is going to open. So we closed at 18.02. So let's call it $9 and $9. My anticipation is AMC is going to open at $9 and APE is going to also open right around $9. Okay. So this chart is going to be adjusted for that. So basically your high of 70. We'll call it $70. It's going to look like 35, from here on out. But like I said, we'll wait and see. Now, what I do know is this chart is going to be adjusted. Okay. What I'm not sure on, the way I understand it, the way I read it, is that is how the price action is going to work, where it's basically going to be a 2-to-1 stock split. Okay. It's not a 2-to-1 stock split. Let me be clear on that. It's not a 2-to-1 stock split, but it's going to look just like one. Okay. So if AMC did a 2-to-1 stock split on Friday, then its share price, its float would be doubled, and its share price would drop to $9, just like how the GME split worked. Back here in January, GME ran up to, always do that, can't have a video without that. GME ran up here to, $500 or whatever, so now its peak shows at $118. So AMC is essentially going to look the exact same way. Okay, so this will all get adjusted. We'll have to probably redraw some lines. But so we had the spinning top candle. We got the big push down. Now, from a daily standpoint, and if you follow trades, which if you're watching me, you follow him. But we were talking and texting about how this is going to be potentially, let me go back here to Twitter. So potentially a abandoned baby, which is you get the massive push down, then you get a gap down, and it's going to create a doji candle, and then you get a gap up. And this demographic is showing pretty much an equal size candle. Doesn't necessarily have to be an equal size candle. So for this to play out though, what we're going to want to see is we are going to want to see something similar over on the other side. Oh goodness, not a red candle. Can't handle that. So, whoops. Something like that. That's what we're going to be looking for tomorrow. Would love to see a gap up. This would be my most bullish case scenario. Would be the abandoned baby is going to play out and we get a little bit of a gap up and a nice little push up tomorrow, which would take us back up to that $22 range. Okay. Now, the abandoned baby is a 3 candle pattern. So we got 1, we got 2, but we need number 3 for confirmation for a reversal. If we just get a push down tomorrow, then it is invalidated. And that can always happen with TA. A invalidation of a pattern can always happen, and it does happen. Now, I will say this. You are more likely to see follow-throughs on continuations when it is, the more macro it is, the more likely you are to see the continuations. But it is still very possible for this to be invalidated and we get a push down. Okay? Just want to make sure I'm clear on that. Here's a perfect example. So right here, this would have been back in April. So after the big push down, came down here, retested this area right here, retested, so straight across retested. And then what did you get? I guarantee I probably made some type of bullish video because this is a good reason. You got a big bullish engulfing candle. Let's see if the volume even picked up. Yeah, and the volume even picked up a little bit. So this would have been a great reason right here to go, this potentially could be, which I think I even did, if we were talking about, potentially like this was wave 1. And that probably would have been 786-ish. Yes! It would have been 786s. You get a bullish engulfing candle. You get increasing volume. So the most logical thing to think here was like, yeah, we're going to kind of keep pushing up. And what happened? Yeah, we had to kind of keep pushing down. Okay? This is a perfect example of a great setup that got invalidated. So, this is why I keep harping on great setups need great follow-throughs. If you don't get the follow-through candle, so what you would have been looking for right here is you'd have been looking for one of these guys. It's like a continuation. But you didn't get it. You didn't get it. You got the push down instead. And that's sad. Hashtag sad face. But it's reality. So, we need to see something like this tomorrow, or, in my opinion, it's going to be invalidated. So we got a great setup again. But those great setups need that great follow-through. Okay? Okay, last but not least, let's talk about cycle chart, and then I'll let you get out of here. If you have stuck with me, I appreciate you. You are awesome. You're going to be a winner in the stock market and in life. If you left a long time ago, you're a loser. I'm just kidding. But not really. So, cycle chart. So, man, I've always told you guys that when I don't know, I'm just going to say I don't know. All right? So there's some things about this cycle chart that I still absolutely love, and there's some things that I don't like. Okay? If where we are right now would have been playing up, so we had that ascending triangle pattern. It was a beautiful setup. We did not get the follow through. I was hoping that ascending triangle pattern was going to take us up and, hopefully push us up to get our gap fill that we talked about at the 38.93, and then we would kind of see this shape. So I was hoping we were going to push up to about 38.93, and then we were going to kind of see this happen. So just a bunch of resistance, and just get pushed all the way back down to the top right here, which would have been, right around $30. That that's what I was hoping for. That did not play out. So typically, though, every AMC run, and not typically, every AMC run has had a ascending triangle pattern that failed. Okay, so let me show you. So right here, this pattern right here, let's see here, where would that have been? April 19th. Let me go back here. Okay, I'm going to have to go in the lower time frame. Yep, right here. So, you'd have been kind of looking at this, sort of like a flat top area, but you got a nice little uptrend going. And what happened? Bleh! It puked out of it. And then it turned into a nice run. Ascending triangle pattern. What happened? Bleh! Puked out of it. What happened? Turned into a nice run. Go on back here. Oh, I can't do it on the 15-minute candles. See if it'll give me on 30. Yeah. This one's not as bad. But ascending triangle. What happened? Bleh. Not quite as far down before you got to push up. So AMC has a habit. Look here. Ascending triangle. What happened? Bleh. So AMC has a habit of having these nice looking ascending triangle patterns to play out. Look at this. A hero. Uptrend. Bleh. Dumped out of it. So AMC has a pattern of doing this and dumping before eventually leading to nice runs. So this isn't super stressful or uncommon, but it is what happened. Okay, so now we're just looking for where we gonna catch, right? So right here we're at the 707. Whoops, I was not drawn very well. Apologies there. So we're at the 707. If we come down here, whoops, here. So this is where, if you watched my video from Thursday last week, I was hoping it was just going to catch right here. But like I said, meme stocks like to run together. And dadgum Ryan Cohen dumping on Bed Bath & Beyond. Not good for GME or AMC. I was out of Bed Bath & Beyond a long time ago. So, this is what you got to do with fibs. Just got to see what the more macro fib from right here. Yeah, so if we come up here, get rejected off at 1850, then potentially we could see that 1650. That's probably most likely going to be, and then that will give us a double bottom right here from the run right after earnings. And this is what happens when you go straight up. You're pretty much going to go straight down. Now the good news is the faster you do go straight down, it's going to help cool off a lot of things. So if we go back here to the daily, if we turn the RSI on, so you can see right here, rocket ship goes straight up, rocket ship goes straight down. So if you look right here, potentially we could even be getting a double bottom on the RSI, start pushing back up. That would help out with the abandoned baby theory. That makes a lot of sense. So my most likely and what I want to see. So let me be clear. This is a little bit of biased opinion. My most likely and what I want to see is I want to see the abandoned baby play out. and there's reasons to back up why that is very potential. We could get the double bottom on the RSI. We were catching the 0.707 fib. Obviously, hopefully, we're going to see some good, solid buying pressure in the APE stock that is getting released. I do all my trading through Fidelity. I've been checking every single day so far, and so far now I can search up APE in Fidelity, but I do not have any APE shares in my Fidelity account yet. I will post on Twitter when I do. So downside targets are going to be coming down to the 618 at 1650. But obviously these numbers are all going to be adjusted. So if you're watching this later on in the week and it's, at $9, you're going to be like, oh, you said 250. Because it's all going to be adjusted, okay? Just calm down and read and research before you get mad about stuff. So bearish case scenario is going to be 1650, or even coming down here and testing this bottom trend line, which is, like I've always said, right around that 1350. Worst case, man, I really don't want to see anything more than a double bottom right here. We start breaking below this area, this little area right here. Oh man, got rid of the wrong thing. Sorry, trying to get rid of that fib. If we start breaking below that, I'm going to be pretty unhappy, okay? Because it's just I want to see a double bottom. That way, we can continue, our good positive momentum that we've got going on here, from down here on this low back on May the 12th. So we've had a nice run. I do think the rocket ship, if you will, needs to come down and get refueled before heading up. So wow, this has been a long video. So to wrap everything up, please understand exactly what is going on with APE. It is not hard to go and read everything that they have talked about. So there is going to be APE and AMC are going to be split. 516 million AMC, 516 million APE. However, there is 1 billion total. So there's 484 million that they can issue at any point in time that they want to. They won't issue more than that 1 billion, or excuse me, they have no plans to issue more than that 1 billion in the calendar years of 2022 and 2023, but they can at any point in time that they want to. They can. That is not FUD or anything like that. That is reality. Okay? Deal with reality. People who just, they want to stick their head in the sand and think, no. Rockets, more, $1 million a share. That's all that's going to happen. God bless them. And you're more than welcome to do that if you want to, but it's not reality, okay? What I'm talking about is reality. So, going to be split into two different tickers, essentially like two different companies. APE's value comes from AMC. So in my opinion, this is going to act like a 2-to-1 stock split. That is what I think we will see. So if AMC finished at $18, I think we're going to see 9 and 9. I could be wrong on that. All right, let me be the first to admit that. But I think that's what's going to happen. So APE will start trading on its own. AMC will start trading on its own. You could be able to buy both in your portfolio. I have zero plans on selling either one of them, but I take it at a day-to-day, literally at a second-to-second time. That's how I manage my portfolio, okay? It's always, everything I own is for sale, all right? Except my kids and my wife and my 3 dogs. Yeah, that's it. Everything else is for sale. SPY, we're hitting a bad point in the global market, in my opinion, as far as what the chart is showing me. So I think coming down here and testing 416 is its most likely outcome. Would like to see a bounce there before pushing back up and heading up towards 450. GME is not looking great right now. I think it's got more downside in its future, which probably means AMC does as well. Coming down here, not too much more though. Coming down here to the 618 would be most likely if it can't, get a push out from here. But if AMC and GME, both gap up, but once again, what happened with Bed Bath & Beyond in after hours on Friday, it was not looking good, and obviously that's been affected both. Yeah, it dropped another $1.25 down to $9.78. So that can definitely have a negative effect on us. And then AMC, what I'd be looking for is the abandoned baby to play out. So we want to see a nice gap up, big solid green candle, pretty close to matching what we saw on on Thursday, but I don't want to come any lower than right here. Worst case scenario around that 1350 to 14 area. So essentially like a double bottom. That would be my worst case scenario before we start to push back up from a bullish standpoint. Obviously, worst case scenario is always going to be just we start making lower lows. We don't want that, right? So obviously we want to see APE start to get some actual supply and demand. So when it comes to the cycle chart right here, we had this ascending triangle that spilled out, ascending triangle that spilled out. So we could be in this range right here. I wish it was happening at higher levels. I really do. I wish this would have pushed up and we would have gotten rejected off that gap fill, then came back down to the $30 range and was kind of trading sideways. But the reality is everything that's going on with APE and everything like that, we didn't have that in January. We didn't have that in June. We didn't have that in March. So we're a little bit in uncharted territory, uncharted waters, so to speak. So, but I'm still confident in this playing out. It's just the levels are going to be a little bit different. Like I always said, we came down here, we dropped lower after the March collapse than we did back here in June. So it came down here and essentially double bottom before pushing back up, where here it went from 13, came all the way down to $9.70 before starting to come back up. So if you give us a little bit of $3 grace here, that still only would have taken us about right here. So we're definitely playing out at lower levels. I don't like to see that, if I'm being as honest as I can. So this all is a little bit of wait and see. We'll see how it plays out, but it hadn't let me down so far, so we'll see where it takes us. That's going to be everything. I appreciate you if you made it to the end of this incredibly long video. You are awesome. Please like and subscribe. Follow me on Twitter, and I will see you out there in the markets. Have a good one, my friends.